Hello and good morning to everybody who is joining our webinar today. I'm very happy to open the webinar where we will be speaking about renewable energy source deployment in the Balkans. And we will be focusing on four markets. My name is Ramses. I'm a project manager at Solar Plaza, and I will quickly take you through the agenda for today. So I will give a bit of background on the webinar, why we are doing the webinar and the event, the Solar Plaza Summit Balkans. Then we will listen to the presentation. I'm joined today by Evangelos Gazis and Panos Kefalas from Aurora Research. Very happy to be joined by these two very knowledgeable gentlemen. And then we will have a Q&A after the webinar. And at the end, we will share a little surprise for everybody who has stayed with us throughout the webinar. Okay, so a bit of background on Solar Plaza. So we are one of the knowledge centers and connectors in the PV industry. As you can see, it's our business to accelerate the sustainable energy transition. Based in Rotterdam, but with a truly global mindset, active in, as you can see, more than 40 countries worldwide. We have a track record of over 180 events and conferences where we connect the solar PV professionals. But we also, besides our conferences, do this through newsletters, resources such as white papers, or webinars like these. So we like to share the latest information and create a global PV network. We also do several, there's also several side activities associated to Solar Plaza. We have a consultancy, which is your go-to party if you want to enter, oh, that's a bit too quick. If you want to enter a new market, if you want to build a network, or if you want to build on experiences in solar markets worldwide. So if you're interested in exploring some of the markets that we work in, please get in touch with us. You can see the link below on the screen. We have a very knowledgeable manager who's happy to help you in your solar activities. We also have a foundation in Solar Plaza. The foundation is really focused on enabling the energy transition for everybody, for all. As you can see, we have several partners, and we focus on accelerating the transition by contributing to several projects, by project management, by initiating projects, and also by connecting the relevant people to projects that have been set up in some of the markets. So also, please check out our website if you're interested to find out more about the work of the foundation. Then a little bit of background. So this webinar is in the run-up to our Solar Plaza Summit Balkans. We have a really exciting event coming up on the 8th of December in Zagreb, in the Westin Hotel. It's our kickoff edition for the Balkan. So a really exciting time to be joining these markets or to be exploring these markets. So as you can see at the event, we will be focusing on and ensuring that there will be business links made between all the PV professionals that are active in the various Balkan markets. During the event, we will focus on topics such as announced auctions, project development opportunities, what is the market growth going to look like, and much more. There's going to be a very exciting series of speakers, so keep an eye on the website, but also make sure to get your ticket in time. As you can see, we will share this little present already. There is a discount code in the right bottom of the screen, so you're very welcome to join us on the 8th of December at the conference, but also on the 7th of December at our networking dinner in Zagreb. Now, some practical notes before we start the webinar. If you have any questions, then use our Q&A box in the right side of the screen, because we will have a Q&A opportunity after Oh, I go on. We have a Q&A opportunity after the presentation. So during the presentation, you can already ask anything, and we will make sure that these questions will be asked, or as many as possible, to the presenters after the presentation. If you have any technical issues, such as audio or video, also use this Q&A chat box and reach out to us, and we will try to help you as quickly as possible in resolving these issues. And also important, if you have any other obligation throughout the webinar, or you have, let's say, some Wi-Fi problems, no worries, because we will share the full recordings and the presentation slides with you afterwards in an email. So you can also look at the discount code at your own pace to buy a ticket for the event. Then I am very glad to introduce our two speakers. So firstly, I would like to introduce Evangelos Gazis, who is the market lead for Southeast Europe at Aurora Research. As you can see, Evangelos has a really impressive track record managing, for example, several studies in Aurora on hydrogen, but also, for example, co-authoring a book, Energy Innovations for the 21st Century, with a vast experience on, as you can see, a range of countries in Southeast Europe. We're also joined, hi Evangelos. We're also joined by Panos. I'm also really happy to introduce to you Panos Kefalas, who is a senior research associate within Aurora, working both in the consultancy and the research branches, who's also been a lead analyst for several projects in the UK and several world investments banks. So very happy to now give the word. I think we start with Evangelos, and I'm very excited for your presentation. Thank you. I think you're on mute, Evangelos.
I'm having some audio. Hear me now?
Yeah, now we can hear you.
Perfect. I'm sorry for that. Yeah, many thanks for the introduction. I hope it goes smoothly from now. Just the headphones battery just died. But anyway, I'm really excited to be here. Many thanks for the invitation. Very happy to be contributing to this webinar, but also to the event in a few weeks' time. Yeah, always excited to be part of Solar Plaza events. So many thanks. In terms of what we will be discussing today, we will prepare a few slides for the market in Slovenia, Croatia, Serbia, and Bulgaria. And yeah, Panos and I will walk you through what we have done lately in terms of an outlook for renewables, but also some key insights regarding the underlying drivers of market developments in the region more generally. Before we do that, if I can have a couple of minutes to introduce Aurora for those who don't know us. So Aurora is an energy analytics and advisory services company. We are active in most of Europe, and we cover the main markets from our 5 offices across Europe, in Oxford, Berlin, Paris, Madrid, and Athens. And we're also active in the US and Australia, covering most of the markets, the energy markets. So that includes power markets, wholesale markets, balancing, but also other emerging markets like hydrogen, carbon, and commodities. In terms of our team in Athens, we are covering the Southeastern European region, and by that we mean 7 countries, including Greece, Bulgaria, Romania, Hungary, Slovenia, Serbia, and Croatia. Today we will be covering the middle Balkans, the 4 countries in the middle, but in terms of what we do in Aurora, we do offer comprehensive services for all these 7 markets, including quarterly reports and bespoke advisory services. And the main thing that we do is providing forecasts for the long term, and that is partly what we will be discussing today. So we will be focusing on the 4 markets and mainly the outlook for the renewables and the power prices more generally. So we prepared this slide that provides an overview of the key underlying drivers for the market. So all of those markets are experiencing a fundamental shift in terms of their market, in terms of their energy mix, and this is driven by a few main drivers. So firstly, there is the overall decarbonization ambition. So all of these countries have stated ambition regarding the reduction of carbon emissions and deployment of renewables. For example, in Bulgaria, there is a 19% decrease of greenhouse gas emissions in the energy sector by 2030 compared to baseline of 2015. In Slovenia, this is 20% for non-energy trading scheme sector and 34% for energy sector, with a different baseline, but still quite ambitious. And Serbia has even committed to a carbon neutral system by 2050. So most of these countries, 3 of the countries, are the main tool to reach this decarbonization is the participation in the energy emissions emissions trading scheme across Europe. So it's Serbia that is not participating in the carbon pricing system across Europe, but the other 3 have implemented this for the energy sector. So that's one of the fundamental drivers, the ambition for decarbonization. The other one is the shifting, which is very related, of course, which is the shifting capacity mix, and particularly the decrease of lignite and coal capacity, but also the limited nuclear capacity. So all of these countries are expected to have a coal exit before 2050. Some of them have already stated the retirement plan for example, Bulgaria has ambition to do it by the mid-2030s. Before that, we expect Slovenia and Croatia to achieve this, and Serbia might be the last one to have coal in the region. At the same time, there is some nuclear, but not a lot of new nuclear. So, for example, Croatia and Slovenia, they share a nuclear plant, which will remain operational until 2043. Serbia does not have any nuclear plants currently, and Bulgaria has significant nuclear capacity, but and there are also some ongoing discussions about new capacities, but that's still quite uncertain. So overall, decreasing baseload thermal capacity, mainly driven by the exit of coal and lignite plants, which allows for some new capacity to be deployed, and that is mainly going to be a renewable capacity that is going to be deployed across, and there is very strong deployment outlook for both solar and wind, and we will look into that in a minute. But just to provide some more detail on the coal exit plans, as we said, Serbia will probably be the last one to have the whole of coal fleet exiting by 2050. And that's mainly going to be driven by the aging fleet, but also the plant economics. So lignite and coal will increasingly be out of merit, given our outlook of gas prices and increasing carbon prices. But yeah, Croatia and Slovenia have already plans to do that by early 2030s. And I did mention gas prices and carbon prices, and these are 2 underlying drivers that are very important for baseload prices across the region, and of course, by extension, the economics of new assets like renewables. So solar and wind capture prices are highly affected by what is going on gas and carbon prices and markets more generally. So I wanted to spend a couple of minutes just explaining the main dynamics and what we see as the short-term outlook, but also the long-term outlook for commodities in the region. So starting with gas on the left-hand side. Gas is, we all know it's at a historical high now. We expect that gas prices will continue to rise over the next year or so. And if we look at future contracts, this is already evident. Prices next year will be higher. Yeah, but we think that this will reach a peak and then start a very sharp decline, and that will be driven by the fact that more LNG terminals will be available in Europe, and that will mean more LNG supply will bring some balance to the market in Europe. So we expect by 27 gas markets in Europe to find a new balance, and after that, long-term cost will depend on, or long-term prices will be driven by the cost of LNG in Europe, and that's what we see as driving prices slightly upwards over 2060. So that's gas. In terms of carbon price, yeah, there is a little bit of a different story. So we expect a slight decrease over the next couple of years. So that's mainly because of the response to the gas market situation and easing certain pressures for next winter, easing power prices. But then we expect that increasing decarbonization ambition, a tighter cap on annual emissions will move prices up. So we expect prices more than 120 euros per ton of CO2 by 2060. So this is the general picture for the short and long term when it comes to commodities. And maybe we can now have a look at what has happened over the last few years, the last couple of years really, and I would invite Panos to walk us through maybe with an example from Bulgaria. Panos, over to you.
Thank you very much, Evangelos. Yeah, I think this was a very complete overview of the region and the key drivers behind the change that we expect to see and the ongoing energy transition. But here it would be also useful to share the view of what is happening right now in the power markets themselves. So where do we stand now? If we look at this exemplary slide for Bulgaria, which is quite similar for all the countries in the region, we can see first that there's let's say a common trend along the different countries. So on the top left-hand side, we can see how the demand has evolved the last 2 to 3 years. We saw a big slump in 2020 due to the pandemic and the reduction of consumption, but then essentially we saw a nearly full rebound in 2021. However, in terms of prices, the situation is slightly different. We didn't just see a full rebound, but a skyrocketing of prices that is due to the energy crisis that is ongoing from the summer of 2021. So as you can see on the right-hand side, while the historical prices for Bulgaria used to be between the 40 and 60 euros per megawatt hour, last year alone, the prices, the average prices were at around 107 euros per megawatt hour, and in 2022, up to date, we have prices of over 260 euros per megawatt hour. So this can give you just the magnitude of how much power prices have actually increased. It's more than a factor of 5. And this, of course, translates to a similar shape on the monthly prices that we see on the bottom of this slide, where essentially, because of the very high gas prices since the onset of the war, we haven't seen any month with prices well below 200 euros per megawatt hour. But more recently, the trend is more above 400 euros per megawatt hour. Now, I think this is the regional overview and the key drivers behind it, but it would be now good to go into the actual outlook for renewables. So what could be the future of renewables and what would be the potential route to markets for all this new capacity? So first of all, here we would like to start with the capacity outlook for renewables based on our latest analysis from October 2022 in our quarterly market forecasts. And here you can see what is the growth estimates that we expect from 2025 to 2050 for each of these four countries. So from the first side, you can see that the deployment is expected to grow at well above 200% in the region in this 25-year period. But we see a lot more growth in Bulgaria and Serbia versus the other countries. But this is simply because the system size is much larger in these two countries, but also there is a lot more thermal capacity retiring in these countries, which means there is a higher need for replacement compared to, for instance, Croatia and Slovenia, where nuclear plays a significant role, but at the same time, hydro is a very important part of the mix. Now, the second key consideration here is that we expect solar to be taking the lion's share of new capacity, as you can see from the green bars, and this is mainly because of its very quickly reducing costs, but also its relatively easier licensing conditions. Now, all this capacity is a huge opportunity for growth, and it is expected to come both via subsidy schemes from governments, whether that is a CFD scheme or something similar, but also via merchant additions that are come to the market without any subsidies. In the near term, we expect subsidies to drive most of the growth. However, increasingly, as we move into the future, we expect merchant assets to be those that will contribute the most into decarbonizing these economies. Now, we can start with some of the subsidy support schemes in these different countries and analyze what each of them offers. So first of all, Serbia has recently introduced a feed-in premium scheme last year, and there is one auction that is expected to happen in 2022 or early 2023, but this will be the first real, let's say, effort by Serbia to have the CFD-like scheme in order to really support renewables integration, which is now at a very low level compared to its neighboring countries. The first auction is set for 400 megawatts of wind capacity, and the maximum price that would be allowed in this auction is just below 56 euros per megawatt hour. Now, there are reasons that there is a delay, and this is potentially because of the current situation and the extremely high market prices, which would make an auction slightly less attractive, but we would expect that the maximum price for this auction could be revised before we see a new auction in the scheme. So all in all, in Serbia, we do expect the first auctions, and we do think that they will play a significant role, but at the moment, we haven't yet seen the auction, let's say, materializing to its full potential. On the other hand, if we look at Croatia, this is an example of a more, let's say, concrete policy with around 2.3 gigawatts of renewable capacity to be awarded under the auction schemes. It's still at more early stages with only 2 auctions that have taken place, but the provision is there and is aligned with EU targets. Now, it's quite interesting what is going on in Croatia, because the first auction was rather small, more like a pilot auction, awarding around 25 megawatts of renewables. And the second auction, while it was set for over 600 megawatts to be awarded, actually cleared with only 150 megawatts. So we see here an issue with an undersubscribed auction in Croatia. There are plenty of reasons that this could have been the outcome, but the main one is that the current high market prices which are around 5 times higher than what someone could get in the auction, are not, let's say, a driver that attracts people to go into the auctions. And in fact, the last few months, around 1/3 of the subsidized capacity in Croatia, so around 340 megawatts of feed-in tariff projects, decided to terminate their contracts so that they can access the higher revenues in the wholesale market. So this is how we stand in 2022, which is a rather odd year for auction schemes. But overall, what is expected is that there will be over 2 gigawatts that will be awarded for Croatia. And as you can see on the bottom right, this is expected to be quite equally balanced between wind and solar in the next few years. And that would really drive most of the growth in the Croatian market up to 2030. Now, Slovenia is a very similar market to the Croatian one. In fact, they're so well coupled that their price differential is usually below €1 per megawatt hour. But Slovenia has a slightly, let's say, less active support scheme for renewables at the moment. And this may be also because of the higher contribution of nuclear capacity into the country's scheme. So they do have as well a feed-in premium scheme similar to that one of Croatia, but there hasn't been really any auction yet that has led to any significant capacity be awarded. The interesting bit about Slovenia is also the ratio between wind and solar that could be developed in the country. And this is something that maybe we can just discuss by looking at the actual NECP goals, the National Energy and Climate Plan goals of Slovenia. And this is an important example to show that depending on the renewables potential of each of these countries in Western Balkans, but also in general, there could be different targetings in their goal setting. So as you can see here, Slovenia tends to favor solar PV a lot more than wind for their, let's say, growth of renewables. And this is mainly because it just happens that Slovenia does not have a very good wind potential. It's in fact one of the lowest wind potentials in Europe. And therefore, it seems that quite similarly to Hungary, there is a very big focus on solar, and solar is expected to be the main driver for that growth. Therefore, we expect relative to the system size, a massive growth of solar in Slovenia, over 1.2 gigawatts by 2030. Now, after discussing some of these subsidies and the government support that could be offered in order to reach these targets, but also lead to the capacity deployments that we project in our analysis, the second important bit here is what would happen with these merchant-based projects and how good their fundamentals are for coming into the market. So what we saw here, and will be the key for understanding if the potential for these markets are good, is essentially we do a comparison of the base load price, which is depicted in gray, the capture prices, which are the generation weighted average prices for wind in blue and for solar in green. But also we saw in these diamond shapes the levelized cost of each of these technologies in these 4 years that we have selected. Now, what do all these mean? First of all, the levelized cost of the technology essentially shows what would be the average cost over its lifetime for producing the electricity based on all of its capex, its weighted average cost of capital, and so on. Therefore, what we would be looking at here is if the capture prices are way above or above the levelized cost of energy, essentially we say that there is a very big, let's say, opportunity for renewables as there is a profit margin to be made. Now, in 2025, where prices are still expected to be high due to the not full rebalancing of the gas markets, we can see that we have a very big gap between the actual levelized cost of the technologies and the capture price that these assets get. Now, after 2025, that we expect the gas markets to be more imbalanced, and therefore base load prices are dropping a bit further. We see a similar situation, and the reason is that the levelized cost of energy keeps reducing for all these technologies because of the reducing cost. And one important driver here is the rate of reduction. For solar, this is much quicker than for wind, and this is because there are many more, let's say, technological advances that can be made on solar technology for reducing capex versus wind. But all in all, what we can see here is that in all the years that we have pointed out here, which is the next essentially nearly 20 years, the economics of both merchant wind and solar, under a discount rate of 9%, of course, appear to be attractive enough to lead to merchant deployment without any subsidy support. And this is the example of Croatia that we are using here. But if we were to remake this for any of the other countries, we would actually see the exact same picture, that the economics of merchant renewables are attractive enough for merchant build-out. And then finally, I would like to present some of the trend of the LCOEs of these two technologies in the four countries. So yes, here we go. Perfect. So on the left-hand side, we have the levelized cost of electricity for onshore wind, while on the right-hand side for solar PV. Now, you can see that there are some larger differences in onshore wind on the left-hand side, and this mainly has to do with the fact that the wind potential is much more different than the solar potential between these countries. So as I mentioned earlier, Slovenia tends to have much lower wind load factors, which result in higher levelized cost of electricity. But the key, let's say, argument here is that the levelized cost of electricity for wind is expected to drop by about 9 to 10% in the next 18 years or so. However, on the right-hand side for solar, we expect to see more than double the decrease in terms of the levelized cost of electricity. And also you see that the levelized cost of electricity for solar is quite similar between the countries, and this is because the solar potential in the Western Balkans is generally considered quite strong, and the insolation in all of these countries is at a very sufficient level to lead to merchant deployment. I think this is the key takeaways for the deployment of renewables in the outlook. We see both on a subsidized basis, so that was the analysis of the support schemes, but also on the merchant basis. So if I were to just finish with one summary, let's say sentence, it would be that we do expect the subsidy support schemes to drive and fuel the growth in the few coming years, but increasingly we would expect merchant projects that come into markets either by going directly participating in the wholesale market or signing long-term PPAs that we will discuss soon, would be the increasing trend after, let's say, the mid-2020s. And with that being said, I would like to pass to Evangelos, where he can discuss the PPA potential.
Many thanks, Panos. That's a great transition to the next part of the presentation, where we will be discussing about PPAs. And as Panos mentioned, that's one of the most important ways of merchant projects to get to the market and get some revenue security. And we see that this is an increasing trend across Southeastern Europe, across Europe really. That's a relatively new concept in Southeastern Europe, and we see that a lot more developers now are seeking these kind of long-term contracts. And yeah, let me present a few slides here on two things. One is the market dynamics, really, supply and demand in the region. We'll take the Bulgarian example, Bulgaria as an example, and then we'll talk a little bit about benchmarks in terms of fair values for contracts. So starting with the supply and demand analysis, we have this slide that outlines how we provide the outlook for the demand for PPAs. And the way we do that is by clustering different types of corporates into 4 main categories. And the way we define those categories is based on how close this group is to consumers, so how high propensity to decarbonize their energy supply is. The other dimension is how energy intensive these companies are, which would reflect how interested they are to hedge their supply to provide long-term security in terms of prices, but also how close they are to the market so that they can negotiate and set up long-term contracts, really. There is also a third dimension, which is reflected here by the colors of the different bubbles in the chart, and that's how credit-worthy different companies are. And that's quite important because given that PPAs are long-term contracts, creditworthiness is quite important so that they can be reliable counterparties in these long-term contracts. So having done this analysis for Bulgaria, we can see how the different types of companies map on this chart, and we can see that, that there are lots of there is a lot of demand, energy demand for from companies that are active in the metallurgy business and the minerals and chemicals. However, these are all industries that are not necessarily very close to consumers, so they don't have a high interest in decarbonizing or going into green PPAs. The main driver for them would be to hedge the future price costs by entering into these long-term contracts. On the other hand, there are a few businesses like wholesale and retail and hospitality sector companies that have an interest to decarbonize, but at the same time, they're not necessarily credit worthy enough to go into these long-term contracts. The usual reliable counterparties would be large technical companies like data centers, which are generally more credit worthy and have high demand. And these are indeed one of the biggest demand players in the future when it comes to green PPAs. So these are the main categories, and maybe we can now compare this to the actual supply that we expect in the market. And the way we calculate the supply is based on our view on the future growth of the market from now to 2030 in this example in Bulgaria, and we see that there is substantial growth, mainly in solar and partly in wind. And what we can see is that this growth we will need to discount so that to reflect things that will be subsidized or under some type of support. And the reason we will do that is discount this volume is because these would not be eligible for PPAs. So in the case of Bulgaria, we do have the resilience and recovery plan, which aims to support about 1.4 gigawatts of wind and solar. And that means that we need to take out these volumes from the total potential PPA supply. And that gives us this third column of supply. Now, going back to the demand analysis that we showed just in the previous slide, there are the different types of corporates. And given the fact that there are not many big corporates in Bulgaria, but also the fact that they are not very credit worthy, we have to discount their demand considerably. So these are the volumes that we expect in terms of PPA demand for those four groups of companies. However, there is also this last part of the slide, the one on the far right hand, which is the utility PPA demand. So what we are trying to do here is to assess how many of the corporates will not be able to go to a PPA directly with the developer, but they could sign a long-term PPA supply contract through a utility. And utilities can aggregate demand and also be a reliable counterpart for developers. And actually, this way they can offer quite a lot of additional demand for PPAs. So overall, we see that if we consider the utility PPA demand, that balances out the market, the PPA market in 2030, and it is slightly oversupplied, but generally balanced, we would say. So this is the outlook for the market, and maybe we can, that's the final slide in our presentation, we can touch on a few price benchmarks. So what we define by price benchmarks is actually the value that we see in these contracts that is fair for both the developer and the off-taker. So we take into consideration the actual baseload price expectation, the discount because of the cannibalization effect, and also the fact that this green electricity might have some additional value to reflect the green certificates, the green credentials of this energy. Finally, we do an adjustment which is based on the value of the hedge that is offered by this long-term contract, but also the cost of capital that is at risk by entering this long-term contract. So we take into account all those drivers to come up with these fair value ranges, really. And we offer here 4 examples. The 2 left ones are for 7-year contracts. The ones on the right are 12-year contracts. Apologies, there is an omission here. The wind and solar contracts, the first and the third, the lower bars reflect solar contracts, the higher ones are wind contracts. All of them are starting in 2025. And this example here is from Serbia. So just to touch a little bit on the range of contract values that we expect in Serbia. For solar, generally lower value contracts, we expect that a fair value for a 7-year PPA would be around high 70s for between 75 and 95 for a solar contract. And between 95 and 110 euros per megawatt hour for a wind contract. So that's the 7-year contracts. And then for 12-year contracts, there's a couple of interest trends here. So on one hand, a longer duration contract would reflect more cannibalization, so lower value of electricity in the future, but at the same time, it has a higher value in terms of hedging. So what we see is actually for solar, the overall value of this contract is generally lower. So something between 65 and 85 euros per megawatt hour for a contract starting 2025. While for wind, it's quite similar in terms of the average value to the 7-year contract between like 85 and 120 euros per megawatt hour. So just a note, these are all contracts that are as forecasted, which means that the off-taker would bear the cost of any balancing. So the as produced, the developer is taking on the cost of imbalance. If these contracts were as produced, then the off-taker would need to pay for imbalance, which means that all of those contracts would be lower in terms of value. And this is this concludes our insights that we want to discuss. I believe Ramses would like to host some Q&A now for the next few minutes.
Yes, thanks so much to both Evangelos and Panos. I think you should both be able to see and hear me now. Thanks so much for your interesting presentations to both of you. We do have some questions. I think we still have, I would say 5 minutes for some questions, which I will ask to both Evangelos and Panos. Feel free to still send in your questions. If you have some, I'll make a selection. First of all, maybe to kick off about feed-in premiums and auctions. So could you very quickly summarize also Bulgaria, Evangelos? What has been the situation in Bulgaria? I think you're mute now.
Apologies. Yes. Yeah. I mean, our view is that in Bulgaria there will be some schemes based on the recovery and resilience plan, which is still under discussion, and there is nothing in place at the moment. But we do expect that there will be more. Panos, maybe you can comment more, and also touch on the storage support, which is quite an interesting incentive or ambition at the moment for Bulgaria.
Yeah, essentially to add here, Bulgaria is a bit of a different, let's say, situation than the other countries because it did have feed-in tariffs in the past that drove all the growth back in 2013, 2014 or so. But since then, essentially, there has been no growth in renewables. So Bulgaria didn't really have the intermediate step of moving from feed-in tariffs to feed-in premiums, which is quite, let's say, negative for the development of renewables. But now we see a lot of movement. As Evangelos said, the Recovery and Resilience Plan actually has some plans for around 1.4 gigawatts of wind solar co-located with some batteries for the period up to 2026. And also there is a discussion around a plan for a 6 gigawatt hour storage being deployed around the country in 3 phases, 2 gigawatt hours each, which would change dramatically the balancing, let's say, issues that renewables might be facing in Bulgaria right now.
Okay, thank you. Thanks, Panos. Yeah, and also a point about PPAs. So the ending point of your presentation, Evangelos. So could you also briefly share your view about the PPA situation in Croatia? Is it similar to Serbia, or do you see some key differences?
There are not many key differences. I mean, prices are very correlated in the region. So I would say that in terms of the fair values, we don't expect big discrepancies across the region. So the underlying fundamentals are very similar. Capture prices for wind and solar, cannibalization is very similar. The only difference might be in wind, where we see, for example, in Croatia, there is higher, generally higher wind capture prices, which has to do with the correlation of wind production and periods of high baseload prices. So in general, I would say wind might be higher, capture prices for wind might be higher there, but overall, I'd say it's very similar. One thing that might be different is the balancing costs, although we don't show this in our in the examples that I presented here, but in general, imbalance is quite high in the whole region, but there are some regional discrepancies, and this does have a material impact on when we talk about as produced contracts. I don't know, Pam, if you have anything to add to this.
Yeah, just one more point here. It's important to mention that in our analysis, we consider that Serbia will be adopting the EU ETS from 2026 onwards, which is a rather major change in the market. So if we were talking about a PPA for the next 3 to 4 years, we'd expect to see higher prices in Croatia versus Serbia, just simply because of the baseload prices also being higher due to the EU ETS. But if we're looking at the long term of a PPA that is more than 7 or 10 years long, starting after 2025, this impact is expected to be rather minimal. But yeah, the rest I completely agree with what Evangelos just said.
Okay. Okay. Thanks both. Yeah, of course, very interesting topic, the development of PPAs. Maybe one question to round it off. So how do you see the CNI developments, the developments in, for example, Serbia and Bulgaria? What are the main, so Serbia and Bulgaria, what are the main obstacles in these countries to accelerate the CNI segment?
You mean in terms of PPAs and like adoption of PPAs from commercial industrial players? Is that?
Yeah, or more generally, the CNI segment, how to scale up solar in this segment in Serbia, Bulgaria, or maybe the other two countries. The question is specifically aimed at Serbia, Bulgaria. So happy to hear your insights on these two.
Panos, I don't know if you have any thoughts on this.
I can mainly comment on the power specific side of things, and this is where our expertise lays anyway. But essentially, in terms of corporate and industrial power demand for PPAs, definitely we expect this to be much higher in Bulgaria and Serbia than in Slovenia and Croatia. And this is why also, if we look at the supply and demand dynamics, they are, let's say, improved on the demand side for Bulgaria especially, because Bulgaria tends to have a more stable outlook also than Serbia as part of the EU. And we do see already lots of industrial players that are looking to hedge their positions in long-term PPAs. And this demand is higher, for example, compared to other Southeastern European countries such as Greece or other, let's say, countries with a lot of PPA supply. Serbia is likely to be on a similar situation, to be honest, and the industrial sector has been traditionally an important part of the economy, so it is likely to evolve similar to the Bulgarian one.
And one aspect here is, of course, the banking sector, financial institutions, how keen they are to go on PPAs, which is a whole new tool for them. Of course, it reduces risks, and it is definitely something that is important for them. But at the same time, there are many nuances when it comes to PPAs and contracts that are not clear yet. So, yeah, it is a matter of how fast they can get on board and start supporting and financing projects on PPAs.
Yeah, exactly. So very happy to announce that there will be numerous banks to talk about this topic on December the 8th. I would like to close it off now. Evangelos, Panos, really a warm thank you for being with us today. This was an excellent teaser for what we will be discussing at the Solar Plaza Summit Balkans. So hope to see as many of you as possible on December the 8th to be talking about topics such as where will the market go, PPAs, and many more topics to accelerate the PV transition in the Balkans. Thanks again. Thanks everybody for being with us. And again, thanks a lot for the very interesting presentations. Have a very good rest of the day and hope to see you soon.
Thank you.
Thank you all. Bye.